The state pension went up this April. Most people know that. What most people do not know is that a significant number of the pensioners who were supposed to benefit from that rise are not receiving the full amount they are owed. Not because of a complicated legal argument, not because of anything they did wrong, but because of a specific category of error that has been sitting inside the DWP payment system for years, and which the April uprating has now made significantly easier to spot if you know exactly what to look for. I am going to walk you through this in the next 20 minutes. I will tell you which pensioners are most likely to be affected, what the underpayment actually looks like on your payment statement, and the exact steps to take this week to find out whether the figure hitting your bank account every 4 weeks is the figure you are actually entitled to. If it turns out you have been underpaid, the correction is not just a case of your weekly amount going up from the date you ring in. In most cases where the error is confirmed, the DWP is required to pay back the full amount of the underpayment going back to the point where the error began. For some pensioners, that correction has been a few £100. For others, it has been several thousand. The size of the correction depends entirely on how long the error has been sitting on the record and how large the weekly gap turns out to be. Stay with me because the worst thing you can do with this particular issue is assume it does not apply to you without actually checking. The pensioners most likely to be affected are, in many cases, the ones who would least expect to be. I am John Hartley. This is Money in Retirement. Let us start at the beginning. The £575 rise that came into effect this April was the result of the triple lock mechanism doing exactly what it was designed to do. The triple lock guarantees that the state pension rises each April by whichever of 3 figures is the highest: earnings growth, inflation, or 2.5%. This year, earnings growth was the highest of the 3, and the result was an increase of just over 4.1% applied to the full new state pension. In cash terms, that rise takes the full new state pension from around £11,502 a year to just over £12,082 a year. The difference across a full year is approximately £575. Spread across the 13 4-weekly payment cycles the DWP uses, that works out to roughly £44 more landing in your account with each payment compared to what you were receiving before April. That is the headline figure, and for pensioners whose records are clean and whose entitlement has been correctly calculated throughout, that rise will simply appear in the account without any action required. But the rise creates a specific and important opportunity for a different group of pensioners. Because when your weekly entitlement increases by a known percentage, any pre-existing error in your record does not stay the same size in cash terms. It grows. An error that was costing you £8 a week before April is now costing you more than £8 a week after it. And a larger weekly loss is easier to spot on a bank statement than a smaller one, provided you know you are supposed to be looking. That is the mechanism the DWP is relying on to stay ahead of the underpayment problem. And it is the same mechanism you can use to catch an error on your own record before anyone at the department gets around to finding it for you. To understand who is most at risk of being underpaid, you need to understand that the state pension is not a single uniform payment. It is in practice 2 separate schemes that operate under different rules, with several legacy components attached to both. The first scheme is the old basic state pension. This applies to anyone who reached state pension age before the 6th of April 2016. The amount you receive under this scheme depends on your national insurance contribution record built up during your working years, with 30 qualifying years required for the full basic amount. The second scheme is the new state pension. This applies to anyone who reached state pension age on or after the 6th of April 2016. Under this scheme, 35 qualifying years of national insurance contributions are required for the full amount, and the calculation takes into account any periods where you may have been contracted out of the additional state pension through a workplace scheme. On top of both of those sites, the additional state pension, which is an earnings-related payment that some pensioners receive on top of their basic or new state pension, depending on the national insurance contributions they made during specific periods of their working life. And in some cases, sitting underneath all of that is something called the graduated retirement benefit. This is a legacy payment that dates back to a scheme that ran between 1961 and 1975. The contributions that built up this benefit were recorded on paper in many cases, and the transfer of those paper records to the digital systems the DWP now uses was not always clean or complete. The underpayment problem that has been documented by the National Audit Office and the Parliamentary Accounts Committee over recent years runs through all of these layers. But it concentrates most heavily in three specific groups of pensioners, and I want to take each of those groups in turn so you can work out which one applies to you. The first group is married women who reached state pension age before April 2016, and whose state pension was originally calculated on the basis of their own national insurance record alone. Without the uplift, they were legally entitled to receive based on their husband's contribution record. The rule that created this entitlement has been in place for decades. A married woman whose own state pension falls below 60% of the basic state pension that her husband receives is legally entitled to have her payment uplifted to that 60% level automatically when her husband claims his pension. The uplift is not something that requires a separate application. It is supposed to happen as a matter of course. What the National Audit Office found when it examined this in detail is that the uplift did not happen as a matter of course in a very large number of cases. The DWP estimates that somewhere between 35,000 and 40,000 married women were affected at the point when the scale of the problem first became clear. The department has been working through those cases, issuing corrections and lump sum payments to the women identified as having been underpaid. But the process of finding every affected case has not been completed, and the April uprating, which applies to both the husband's pension and the 60% threshold derived from it, means the weekly gap for any married woman still on an incorrect amount has now widened slightly compared to what it was before the rise. If you are a woman who reached state pension age before April 2016, who is married or was married at the point you claimed your pension, and whose weekly state pension payment has always felt low compared to what your husband receives, this is the group you need to think about carefully. The number to compare is straightforward. Take the weekly amount of state pension your husband currently receives. 60% of that figure is the minimum you are legally entitled to receive as his spouse, assuming your own record does not independently generate a higher entitlement. If the figure on your payment statement is below that 60% level, there is a strong possibility you are sitting on an uncorrected underpayment. The second group is widows and widowers whose pension was not automatically uplifted following the death of their spouse. When a pensioner dies, the surviving spouse is legally entitled to inherit a portion of the deceased partner's state pension entitlement. Under the old basic state pension system, a widow or widower may be entitled to receive up to 100% of the basic state pension based on their late partner's contribution record, if that record is stronger than their own. The process is supposed to happen automatically. The DWP is notified of the death through the Tell Us Once service, and the surviving partner's pension should be reviewed and uplifted if the calculation based on the late partner's record produces a higher entitlement than the current payment. What the investigation found is that this automatic review did not occur in a significant number of cases. Widows and widowers continued receiving the same amount they had been paid before their partner died, with no uplift applied, in some cases for years. The financial consequence of this error compounds over time in a way that makes the lump sum correction larger the longer the error sits undetected. A widow underpaid by £15 a week for 5 years has accumulated a shortfall of around £3,900 before the April rise and somewhat more after it. That entire shortfall becomes repayable once the error is formally identified and confirmed. If you were widowed after reaching state pension age and you did not receive a formal letter from the DWP confirming that your pension had been reviewed following your partner's death, that absence of a letter is the clearest single signal that the review may not have taken place. You are not in a position to know whether you were uplifted correctly without asking, and the department is not going to contact you to start that conversation unprompted. The third group is pensioners who were contracted out of the additional state pension during their working years, and whose new state pension has been calculated with a deduction applied that is larger than it should legally be. Contracting out was a system that ran until April 2016, under which employees and their employers could opt out of the state additional pension scheme in exchange for paying lower national insurance contributions, on the understanding that the workplace pension scheme they joined would provide equivalent benefits in retirement. When the new state pension was introduced in April 2016, the DWP had to calculate a starting amount for every pensioner coming into the new system, taking into account their national insurance record up to that date and applying a deduction to reflect any periods of contracting out. That calculation is called the foundation amount, The problem is that the foundation amount calculation required the DWP to work through individual contribution records that in many cases stretched back decades, included gaps, transfers between employers, and periods of self-employment, and relied on data supplied by former employers and pension scheme trustees, some of whom were no longer operating or whose records were themselves incomplete. The Parliamentary and Health Service Ombudsman has identified cases where the foundation amount was calculated using incorrect or incomplete data, resulting in a deduction for contracting out that was larger than it should have been, which in turn produced a starting amount for the new state pension that was lower than the pensioner was actually entitled to. This particular error is harder for a pensioner to spot independently because it requires knowledge of the specific national insurance contribution records from their working years and the precise terms of whatever workplace scheme they were contracted out into. But there are two signals that suggest it is worth investigating. The first signal is a new state pension payment that feels significantly lower than you expected given the length of your working career. If you worked for 30 or more years in employment, paid national insurance throughout, and your state pension is noticeably below the full new state pension figure, the contracting out deduction applied to your foundation amount is worth examining. The second signal is a discrepancy between the state pension forecast you may have received in the years before you claimed your pension and the actual amount you began receiving. If the forecast said one thing and the payment is meaningfully lower, the difference may reflect an error in the foundation amount calculation rather than a legitimate revision. Now let us talk about the April rise specifically and why this particular moment is the right time to carry out this check. When the DWP applies the annual uprating to state pension payments, it applies the same percentage increase to every component of every pensioner's payment. The basic amount goes up. The additional state pension component goes up. The protected payment, which is the name given to any entitlement above the full new state pension that derives from contributions made before April 2016, also goes up. What does not change when the uprating is applied is any underlying error in the calculation of what that payment should be. If the base figure is wrong, the uprated figure is wrong by a slightly larger amount in cash terms than it was before. This creates a window of opportunity that is most productive in the weeks immediately following the April uprating, because you now have two data points to compare, rather than one. You know what you were receiving before April. You know the percentage increase that was applied nationally, and you can calculate what you should be receiving after April and compare that against what is actually landing in your account. The calculation is not complicated. Take the weekly amount you were receiving before this April, multiply it by 1.041, which represents the 4.1% increase applied this year. The result should be very close to the weekly amount you are now receiving. If the figure on your most recent payment statement is lower than that calculation produces, there are two possible explanations. Either the uprating was applied incorrectly to your specific record, which is a separate error from the underpayment issues discussed earlier, or the underlying figure to which the uprating was applied was already incorrect, in which case you are looking at an existing underpayment that has now become slightly larger. Either way, the discrepancy requires investigation, and the time to investigate it is now, while the uprating is recent and the figures are clear in your mind, rather than months later when the memory of what you were receiving before April has faded. Here is the practical process for carrying out this check, broken down into the steps that will get you the clearest answer in the shortest amount of time. Step 1 is to locate your most recent payment statement from the DWP. This will have arrived by post in the weeks around the April uprating date, and it will set out your new weekly entitlement in detail, broken down by component. The letter typically runs to 2 or 3 pages, and it includes a breakdown showing the basic or new state pension amount, any additional state pension or protected payment that applies to you, and the total weekly figure before any deductions. If you cannot find the most recent letter, look at your bank account for the first payment that arrived after the 7th of April this year. That payment will reflect the new uprated amount, and you can use it as your starting point. Step 2 is to find any previous payment statement from the DWP, ideally the one that arrived in April of last year, when the previous uprating was communicated. If you do not have that letter, look at your bank account for a payment made in April or May of last year. The difference between that figure and the most recent payment should correspond to an increase of approximately 4.1%. Step 3 is to make the comparison. If the increase you can see in your bank account matches the expected 4.1% rise, your payment has been uprated correctly based on whatever figure was on your record before April. The question then becomes whether the figure before April was itself correct, and that is a separate question that depends on your individual circumstances and which of the three groups discussed earlier applies most closely to your situation. If the increase you can see is smaller than 4.1%, or if your payment has not risen at all, that is a clear error that requires immediate attention regardless of any other consideration. Step 4 is to ring the DWP State Pension Service. The number is 08007310469. The line is open Monday to Friday from 8 in the morning until 6 in the evening. The call is free from any UK landline or mobile phone, including pay as you go. Before you dial, sit down with a pen and paper and write out three things: your full legal name as it appears on your pension paperwork, your date of birth, and your national insurance number, which is 2 letters followed by 6 digits followed by 1 letter. You can find your national insurance number on any old payslip, any P60 form, or on any previous letter from the DWP or HMRC. When the operator answers, say this: "I am ringing to ask about my state pension following the April uprating. I want to confirm that the amount I am now receiving is correctly calculated, and I would like the operator to read me out the full breakdown of my current weekly entitlement, including all components." The operator will confirm your identity using the details you have written down, and will then be able to read out the live calculation on your file. Listen carefully and write down every figure they give you. If any figure sounds lower than you expected, say so, and ask the operator to explain the basis of that specific calculation. You are not obliged to accept the first explanation given. If the explanation does not make sense to you, ask the operator to put a note on your file recording that you have queried the calculation, and ask them to confirm in writing what the current entitlement is and how it was arrived at. That written confirmation creates a formal record of the query and triggers a review process that is more thorough than a standard call. The quietest times to ring the DWP State Pension Service are Tuesday, Wednesday, and Thursday mornings between 10 and 12. Monday mornings carry the weekend overflow, and Friday afternoons carry the end-of-week rush. On a quiet midweek morning, the wait time is typically under 10 minutes. On a busy Monday, it can be considerably longer. If you find the phone queue difficult to manage, an alternative route is to write to the DWP Pension Service directly setting out your query in plain, factual language. Address the letter to the Pension Service, Post Handling Site B, Wolverhampton, WV 981LW. Include your full name, date of birth, and national insurance number at the top of the letter. State clearly that you are writing to request confirmation of your current state pension entitlement following the April uprating, and that you would like a written breakdown of all components included in your weekly payment. A written query of this kind typically receives a written response within 10 to 15 working days and creates a paper trail that is useful if a formal review becomes necessary later. There is one more thing worth covering before I close this out, and it concerns what happens after you identify an error. If the DWP operator confirms that your payment has been calculated correctly and the figures match your entitlement on their records, but you remain unconvinced based on the circumstances I have described, you have the right to request a mandatory reconsideration. That is the formal name for the first stage of the official appeals process. You do not need a solicitor or an advisor to request a mandatory reconsideration. You can do it in writing yourself by asking the DWP to review the decision and setting out clearly which aspect of the calculation you believe is incorrect. The mandatory reconsideration request must be submitted within 1 month of the decision you are challenging. If the reconsideration upholds the original decision and you still believe there is an error, the next step is an independent appeal to the Social Security and Child Support Tribunal, which will examine the calculation independently of the DWP. Again, you do not need a solicitor to do this, though free advice from Citizens Advice or Age UK can be extremely useful in preparing the appeal. In a meaningful number of cases, pensioners who pursued a mandatory reconsideration after initially being told their payment was correct subsequently received a revised calculation and a lump sum payment covering the period of underpayment. The process requires persistence and a willingness to engage in writing rather than simply accepting the first answer. But the financial reward for pensioners where the error is genuine can be substantial. If the DWP operator confirms that an error has been identified on your record, The most important question to ask in that same phone call is what period the correction will be backdated to. The department has an obligation to correct underpayments back to the date the error began, not simply from the date of the call. Press for a clear answer on the backdating question and ask for the correction timeline to be confirmed in writing before the call ends. Let me bring this together in plain terms because the practical steps matter more than anything else here. The state pension rose by £575 this April. The rise was applied to every pensioner's record, but the rise was applied to whatever figure was already on that record, and for a significant number of pensioners that underlying figure has been wrong for years. The three groups most likely to be affected are married women who claimed their pension before April 2016 and never received the spousal uplift they were entitled to, widows and widowers whose pension was not reviewed and uplifted after their partner died, and pensioners whose new state pension foundation amount was calculated using an incorrect or overstated contracting out deduction. If you fall into any of those groups, or if the comparison between your pre-April and post-April bank payments does not reflect the expected 4.1% increase, the action to take is the same in every case. Ring the DWP State Pension Service on 08073-10469 with your name, date of birth, and national insurance number in front of you. Ask for a full written breakdown of your current weekly entitlement. Ask specifically whether the spousal uplift has been applied if you are married and claimed before 2016. Ask whether your pension was reviewed following the death of your partner if you have been widowed since reaching pension age. And ask what your foundation amount is and how the contracting out deduction was calculated if you were in employment that was contracted out before 2016. None of those questions are unreasonable. All of them are questions the DWP is obliged to answer, and in many cases the answer will prompt a review that results in money coming back to you that should have been in your account long before now. The April rise has made the gap between what many pensioners receive and what they are actually owed slightly wider and slightly easier to see. Use that window. Check the figures this week rather than next month, because the longer any error sits unquestioned on a record, the longer it takes to unwind once it is finally identified. If this video has been useful to you, the most helpful thing you can do is pass it on to one other person who is on the state pension or approaching it, particularly anyone who fits one of the three categories I have described. Most pensioners across the country have no idea the underpayment problem exists, let alone that the April uprating has created a practical opportunity to identify whether they are part of it. Subscribe to the channel for new videos on what UK pensioners need to know about their money in plain English, and turn on the notification bell so you do not miss the next update. I am John Hartley, and I will see you in the next video.